Wow, banks are crashing again. Look at this. US banks are heading into another banking crisis, it seems. But the markets itself, crypto and Bitcoin and stock market, are they going up or going down? Well, for a long time, I've basically said that the markets move up or down a lot of times depending on liquidity, because we're in a money printing environment, in general speaking, not for the last 12 months, but in general. So there are two ways for the stock of a company to climb. You either wait for the company to basically earn a lot more, make more earnings, improve significantly as a company, or if the company stays roughly about the same, if there's just more money out there, then like inflation, it doesn't just push up the price of eggs and bread, but also pushes up the stock market and Bitcoin and crypto. So that's why we have to look at liquidity. That is the key to knowing where the markets are. So this statistic, for example, is the reserve balances with Federal Reserve banks. Well, usually banks are members of the Federal Reserve, and this is how much balances they have. Does this look familiar to you? Because it's basically peaked in late 2000. Because see, this is the reserve balances of Federal Reserve banks. What that means is basically the total reserves out there for all banks that are members of the Federal Reserve. And it's not everything, but it's a very good rough measure of how much liquidity there is in the market. Look at this, because it peaked at the end of 2021, and it's been going in the bear market ever since, until we had this bounce lately and then had a dip in the last few days. Does that look familiar to you? Okay, so if we were to chart it against the red line, that's the SP 500, what does that tell you? Basically, they're almost in sync. High correlation, not 100%. See, here was the bottom in SP 500, here was the bottom in the banking reserves, right? But however, they basically came down together, peaked together, came down together, and then bounced together. And look at this blue line has just turned down in the last week or so. So this is what we mean by when we say the Federal Reserve is printing money. So when they are selling lots of bonds, buying lots of bonds, they're basically taking those bonds from those banks, and they're giving those banks a lot of money for their bonds. The banks take that money and they can't just give it out willy-nilly. They save it in their own banking system, and that's called the bank reserves. So basically, the reason why a lot of the Federal Reserve and a lot of politicians say, oh, this is not printing money, this is not really causing high inflation, is because they're using this as an excuse. They say that, okay, see the money that we give to the banks, they don't just lend it out, and it doesn't affect bread and milk prices. They just make the bank more safe, more stable. They just provide banking liquidity. They end up in there as banking reserves, so you don't have to worry about it. It won't cause inflation. That's their theory. And that's why we use it to measure how much liquidity is out there. Okay, so let's not worry about inflation for a second. Let's say what they say is true. But does it impact the markets? As we just saw, it has high correlation with where the SP 500 is going. But what about Bitcoin? Okay, so as we can see here, it also has very high correlation with bitter coins as well. So for example, we see this black line. This black line is the US, is the price, right? And the red line basically is US dollar liquidity. When it's going up, we graph it in green. When it's going down, we graph it in red. And you see it's almost an exact match, except this area here. What happened here in early November? That was the collapse of FTX. So that was the only time it didn't work. And since the US dollar liquidity had gone up, it was telling us that the market was due for a big rally. But look what happened. And this is the same chart, by the way, as I had shown you guys a minute ago. So it's taken a big dip right now, but the SP 500 and the Bitcoin market are still up, hasn't followed down yet. So that's something to keep in mind. So the question is, will bitter coins and stocks follow the US dollar liquidity, total US dollar liquidity, as it has always done, or will it be different this time? So in theory, we think it's going down, unless the Federal Reserve can push it back up again. But what are the things that can make that US dollar liquidity go up or down? Well, it's usually two or three things. Technically, it's basically the sum of the Federal Reserve QT or QE, plus the reverse repos from the banks, plus the US Treasury, right, trying to spend money before before they can raise the debt ceiling. It's the sum of those three things. So that's essentially, we really only need to concentrate on two of them, which is what the Fed is doing and what the Treasury is doing, and figure out which direction the market is going. So essentially we can see that recently, because the banking crisis, right, we had this big bounce in Fed liquidity. That's what they don't call it QE, but I call it kind of like QE. Basically you had QT all throughout this year, and then you had this not QE. So basically liquidity increased and the markets bounced with it. And that was around March 9th, if you remember, when SVB, which is a Silicon Valley bank, collapsed. And now see, since then, they've basically said, okay, banking crisis is under control. So therefore, you see, it's dipping down, right? So that's putting pressure on stocks and cryptos to go down. So according to the Fed, they're meant to do 95 bill in QT every month or so. So let's have a look at this. This is 8.7 trillion, right, at the top. And that was in 22nd of March, and by now we're just over a month later, we're down $150 billion, $160 billion. That's a lot. Okay, so the Fed is doing QT again, and they're almost like making up for lost time. They've done about $165 billion in like 36 days, when they're supposed to be doing about 95 billion every 30 days, every month or so. So I guess they just want to make it look like they're not, trying to let inflation back in. They don't want to take the blame, so they're doing QT a little bit harder than normal. Also, the other thing we should look at, as I mentioned at the start of the video, is Treasury. The US Treasury, because the debt ceiling has been pumping money out back into the US economy. Now, in my Discord a while ago, when I first talked about this 3-4 months ago, I called this no QT, because the Fed is doing QT, taking money out of the banking system, but then the Treasury is pumping some money back in, right, at roughly the same rate. So that cancels out QT. That means if there's no QT, then the markets can have a chance of going up. That's why I said this is big bounce. This is called a big bounce or a big bounce, small bull. I've been calling that for the last 3 months. Now, if you are in my Discord, I've been calling this no QT. And he's saying, oh, by the way, guys, this video goes out to my Discord first, then as usual, I let it out to the public after a couple of days. So we can see that every time there's a debt ceiling negotiation, they push it down to 0 every time. But now, because the debt ceiling has been passed in the House and if it passes in the Senate as well, then basically they will start borrowing money again. They need to get that number up again, or else the US government will literally have to shut down. So if they have to push that number up again, then that means they're going to have to sell Treasury bonds. Guess what? They're so behind right now, they're going to have to sell a lot, like a few $100 billion worth of Treasury bonds. If they sell Treasury bonds, then basically they're, well, think about it. That's like QTing a few $100 billion, because essentially, technically, QTing is the Federal Reserve selling or letting maturing Treasury bonds run off. It's kind of the same thing anyway. That's a technicality. Now the Treasury is going to be doing that as well. We're not sure when they're going to start doing that, because we need the Senate to also approve of this 1.5 trillion hike in the ceiling limit, in the debt ceiling. That hasn't happened yet. So overall, folks, to sum all of that up, the liquidity situation, which is so key to driving up the markets, is not looking good, right? Basically, see the black line? It's been following the US dollar liquidity situation very closely, and it is coming down. So I would not be surprised if there's a deeper pullback to around 25K in the next 2 weeks or so.